in this video, I'm going to be talking about M patterns, W patterns, false breakouts, stuff like that, and how you enter and exit. So we're just going to go through this a bit. So when you're starting to mark up your charts, you want to look at the daily because you want to see what exactly is happening with the bigger picture. So last week, for example, we had a massive impulse after this M pattern and then a correction. So with the M and W patterns and chart patterns, if you see them on higher time frames like the daily, the weekly, the monthly, that just means it's going to be an explosive move. So for example, after this M pattern was created, that was about 530 pips. Okay, so that just means on the higher time frames, it's about to be an explosive move. So when we jump down, so I usually start on the 4-hour. If it's too messy to the left and I'm marking out my zones, I'll just go to the 8-hour. It's all the same perspective, guys. It's just jumping down. So like for the daily, one candle equals a daily. One candle in each 8 equals one candle is 8 hours. So on and so on. It's all relative. So what you want to do is like, let's go on the 4-hour and let's try to find a pattern here and I'll explain it to you guys. Okay, so for example here, we had a head and shoulders pattern, which was a really good pattern. But again, when you're looking at the patterns, you don't want to just focus on the pattern. Like you want to focus on zones. Zones are really important, and if you see a pattern, that's just an extra confluence. So for example, right here we have a W pattern. Okay, so we had a huge impulse, correction, one more time to hit that zone and that low, and then a correction or an impulse up. Then the market completely dropped to the low. Okay, so when you're taking your entries at these double bottoms and W's, you need to not just take an entry at the bottom, but you need to realize where your target is. So for example, we would take a long position right here. You got to always round price. So we take it at 900, okay? And our stop loss would be right below structure. And then again, we would take this on a lower time frame so you can get this exact entry. I'm just showing you. So our target, you got to understand, like first of all, we're in a downtrend right now, okay? So what we're doing is we're testing this structure right here. So the thing is if we're in a buy, our first target would be this structure right here. So that's 230 pips. It's still worth this buy, but you got to understand we're in a bearish trend. So you have to be prepared to say, okay, well, if price is coming up to the zone, I need to take a sell because that's where it's trending, right? So this whole move was over 700 pips, about 773 pips, okay? But just from this W pattern, that was 235 pips, and then let's say we take a short here, because you can see price exhaust, the candlestick bodies did not close below this structure at all. There was no bullish confirmation saying, okay, we're going to close above it. So we put our stop loss right above, and our first target would be structure wherever you're looking left, right? So it would be right here, which would be at around, let's see. Let's get this exact price here. Wow, touched it to a T. So maybe 825. Yeah. So around 825 would be your target. Okay. So that's already 433 pips. So you caught 235 just from that W. Once that impulse leg comes from the W, it always corrects. Like literally, I'd say 99% of the time. So you got 235 pips from there, and you got 400 pips from there. Easy. There's no indicators. There's nothing. There's a freaking W, and there's a test of structure, test of the zone, and continuation. That's it. So zone to zone. Easy. So let's do another example here. And then again, when you're doing your entries and stuff, like when you're doing an entry on here, make sure you're looking at the 4 hour, because 4 hour is like major structure, right? You want to focus on the 4 hour, you want to focus on a high time frame. 4 hours is the best. And then you can, once it gets up to that 4 hour structure, you can just go down to any freaking time frame you want, to be honest, and get that precise entry at that level, right? So let's see what else. I just want to kind of explain the patterns, and then I'll start doing live examples like I did with the previous videos. I'll start doing more examples of that, but I just want to show you guys exactly these patterns. Let's see if we zoom in a bit. Okay, so for example, here is a triple top pattern. Okay, so exhaustion, drop down, respected, came back up for that impulse. We have an M, and we also have a double top. Okay, so they're the same thing, double tops, double bottoms, M's, W's, except with the M, once it creates that big leg, it's eventually going to pull up and make that correction move. This is kind of a long drop, to be honest, but basically what happened here is it just came to this structure. And then just like kind of went sideways. So it didn't really do a correction here. I mean, sometimes that happens, but just gotta watch it. So then it kind of moved sideways here, then broke, tested, continued down, then respected, came up, tested, and then eventually dropped. So for here, once you could see that we have that bullish candle, it came down and tested, tried to move up, and then the weekend happened and it gapped down. But just from this M pattern to structure, so this would be your first target, because like I said, you're just looking left to see where price rejected from. So price rejected from here, that's your first target. Okay, so and then same with here. If it breaks this target, then this is your next. Okay, so then what happened? Tested structure, tested, boom, right? So then if we took a short at this level, and then put a stop loss right above. Like I said, when you're taking your entries, you're taking them on lower time frames, but I'm just showing you the bigger picture. So this is your first target where price rejected. Where the price rejected second in this area, right? So you're at 214 pips. You see that price is breaking, testing. It goes down to the next target. You just move your target. So that's 300 pips. So I get a lot of questions of people asking, oh, like, do you put your stop loss closer? Do you take partial targets? How many entries do you take? Stuff like that. Guys, that's totally up to you. Everyone's different. So if you want to move your stop loss to this structure, by all means do. But again, you're just watching how it respects each time. So, I mean, you just got to learn on how to hold the trade, and that takes time and experience. But again, it's like once price comes down to that first target and there's no bullish momentum from that zone and it breaks and retests, you can hold that trade and take that whole trade and get the full amount of pips, right? Or what you can do is, if it's a good retest, like this was just really quick, but our major zone was here, so it dropped for so long, you got to anticipate the market's going to correct at some time. So taking an entry here, how many pips is that? So yeah, it's 100 pips from there, but you gotta keep in mind that like if you take one entry here and then one entry on the retest, you gotta keep in mind that we're at this major low and that prices may correct because of this massive drop. So market structure is the first thing you need to understand. So for example here, so M patterns and W patterns work best at the top of structure or the bottom. Like this happened on the impulse and the correction. I mean, this still works too. See, this still works too because we had exhaustion wicks. The candlestick bodies aren't closing above that specific price. So here's an entry too. But then again, you got to look left and say, okay, like where's my target at, right? So it's in here. This would be your first target. And then what ends up happening is it comes up to structure, corrects, and continues up. So you gotta just be prepared, and you can't think with your emotions, even though that's one of the hardest things. But eventually you'll get to that where you're just focusing on the chart. That's why I preach about not focusing on the money aspect. I preach about focusing on the skill set and the chart, because if you're just focusing on like, okay, my entry's here, my exit is where major structure is at, then I mean, it's not hard. It's practice. That's all it is. But if you're too focused on the money, it's a lot harder. Let's go see if we have any more patterns. I think you guys get the gist of it, to be honest. Like, even for here, we can see that we're at a structure, fell for some time, started to break below but closed above, then tested once, and then completely went to the upside. And then we have structure here, where basically what happened, tested structure here, 1, 2, 3, boom, came up, tested, and then this is where you can use Fibonacci too, right? Go from the high to the low and get your retracement. So it closed below the 61.8, closed below 148, 150 when we round our price, and then completely tanked. So structure is everything though. Let's see another example if I can find one. So here's a good example. Okay, so price comes up to here and had a huge impulse, makes a double top. Oops. Okay, so why this happens, like why price goes above this zone and tries to get people, is because the market makers want to make more money, and so they'll drive the price up, anticipating that the buyers will keep buying, and then they'll start to drop the price, and then they'll bring it back up, and more buyers will get in the market, buying, and then they just tank it. So they make way more money when they do that, right? So that's why people get faked out all the time. And this is why candlestick analysis is not good. Like, it's good to know like about bullish engulfings and hammers and stuff like that. Like this for example is a shooting star, and it's telling you, okay, the market is about to reverse. But then what would happen is if you completely rely on that, you'll sell right there after it, and then it'll reverse 56 pips, and then you're done, right? And then you're like, oh, okay, it might go up. You're going to start buying, and then it completely tanks. So that's why you don't rely on candlestick analysis. Like M's and W's and double tops and double bottoms are the best. But as well as zones, obviously, pure market structure. And then, of course, impulse and corrections. Okay. see if I can find like an inverse. This must have been Brexit, because that's a crazy, crazy move. So here's a Head and Shoulders. Okay, so again, comes up to major structure. We just got to go left. Comes up to structure. This is on the 4-hour time frame, so I'm not going to the daily because this is back in 16 and it will take forever. But Head and Shoulders pattern came down, tested this structure right here where it broke structure, tested, boom. Okay, so even if you missed taking entry here, you could take an entry here because it's retesting this left structure here. So it breaks, retests, breaks again, retests, boom, all the way down. And then again, you're just looking left. So we have price rejecting from here. And then whatever is over here. Like I said, I don't want to go too far back because it's just going to take too long. So again, you're just watching structure. So it comes up, tries to break above, fails to close, reversal candle, boom, to the next low. So that's literally chart patterns and pure price action, guys, is all you need. So let me know if this makes sense. Let me know if you have any questions on this.